Hello again, everybody. I'm Jeff Hirsch. We're here at the Traders Expo in Las Vegas 2019. It is November, and we are with John Carter. He is the president of simplertrading.com, and you've got some squeeze plays going on. That's not a bunt with a man on third, is it?
It is not. This is not a World Series reference. We like squeezes, which we normally do on smaller time frames, 30-minute chart, daily chart. And what that is a compression of the Bollinger Bands to the point where they're trading inside of the Keltner channels.
Now, just for the lay person, Bollinger Bands, a couple standard deviations, and not that that's that lay, show the range, different ranges of where the market is likely to go.
Yeah, and the best way to look at the Bollinger Bands is that when the market is volatile, the bands expand, and when the market's quiet, the bands kind of compress.
Volatile to the point of large fluctuations in price.
Right.
Not the VIX volatility.
Correct, yeah, more based on the price.
And then this Keltner channel is the average
true range.
Average true range of a particular stock or option over 14 trading
over 14 days. 14
And
periods.
what you're seeing here with this squeeze is the Bollinger Bands narrow. That means there's reduced volatility.
Right.
And they get in between that range. And this is a monthly squeeze.
Yeah, and
that
so
you say is rare.
It's rare, so it only happens about every 5 years, and it's something we've been watching develop for several months. And what's interesting about this is that when the Bollinger Bands get to the point where they're inside the Keltner channels, it's like they can't get any more quiet, so they have to release energy. So what's been interesting about the current markets, of course, is that all the news is bad, right? You would assume that the markets were going to signal downside movement, but literally on November 1st, the monthly squeeze on the S&P 500 and the NASDAQ fired long, and the average squeeze lasts 8 to 10 bars. So on a monthly chart, that's 8 to 10 months.
That's huge. When it fired long, how does it fire long? It breaks out above that volatility range?
So the official trigger is when the Bollinger Bands kind of pop back outside of the Keltner channels.
Okay.
Right, so now they're expanding again.
Very cool. And so, I mean, that's 6 months. You got a Carter squeeze. Things are starting to come into place for the market to go higher.
Yeah, so the main thing with this is that because
8 to 10 months.
8 to 10 months, which here's what I've learned with this, because if I'm looking at the news, I'm thinking like the markets have got to top. But what I've also learned in doing this for a long time is to never fight the squeeze. The markets are a lot smarter than we are. It does not make sense to me that the markets go higher, but I never fight the squeeze.
It's like fighting the tape.
Yeah, so the biggest lesson here is that if you are a closet bear right now, because there are some good newsletters out there that can scare the crap out of anyone, and then you and then you wake up and it's like, wow, the world's coming to an end, but you can lose a lot of money fighting the trend. And so the main thing is just that this is a signal about price action, and the signal is that price action is being released to the upside. You know, you just kind of hop on that train.
I think my friend John Person said I'd rather be a petrified bull than a penniless bear or something like that.
I like that saying. Yeah, that sounds good.
And there was another squeeze on the yen, you said?
Yeah, so the yen futures have a squeeze that's firing to the downside.
Oh.
Now, downside yen supports upside stocks as well. And so that's, if you're a currency trader, that's also another big trade that's setting up.
Very
the
cool.
last monthly squeeze in the yen futures was in 2012. When that fired short, yen dropped about 30 points over the next 10 months.
When was the last equity squeeze in the S&P and the NASDAQ?
2012.
And it fired up.
It was so in 2012, yen fired short, stocks fired long, and if you go back and look at a chart of 2012, July 2012 over the next year, huge up move.
Very interesting, very good stuff. Thanks, John.
Won't be dull.
Thanks everybody for joining us.